it's Lauren Perreault from RE/MAX with your weekly home update for the Portland metro area with data through the week ending August 11th. Of course, this includes Vancouver, Washington, and the rest of Clark County. Can it really be this late in August? Wow. Mortgage rates remained at a best-case scenario of 6% for 30-year fixed mortgages as of last Friday. Is Portland metro real estate feeling the impact of lower interest rates yet? Let's take at the most recent statistics and trends. The average sales price is down from the previous week, as is typical for this time of year when agents and their buyers go on vacation or get their kids ready for back to school. So no surprise there. The average sales price is up 3.9% from this time last year, following a 2.3% increase the previous week. So it appears that prices are rising, at least for the time being. Keep in mind, however, that the sales we have seen are for deals that went under contract about 30 days ago, plus or minus, when mortgage rates were about 0.5% higher than they are today. It will likely take 2 to 4 weeks to see the resulting sales prices from the current lower rates. Supply increased slightly over the previous week, and we still have about 32% more homes for buyers to choose from than we did last year at this point. That may seem like a lot, but it simply means that if a buyer found 3 homes that met their criteria last year, they will most likely have 4 to choose from this year. Not a huge increase. Based on the number of price reductions that we saw last week, it appears that sellers are possibly nervous and dealing with some market fatigue. They are down from the previous week, but still very hot in our year-over-year comparison, with more than 50% more price cuts this year than the same period last year. Despite lower interest rates, buyer demand has yet to pick up. When it comes to the number of purchase agreements agreed to by both buyers and sellers, and this is where we should see the effects of lower interest rates, the number of new purchase agreements is down from the previous week, but it's still comparable to last year. The number of buyers looking at homes with their agents appears to be increasing for the second week in a row. This is where we see the impact of the lower interest rates. Lockbox openings on the Oregon side of the border are up from last year. They are up by 8.5%, following a 3.5% increase the week before. So this could be the beginning of a new trend, with the vanguard of buyers encouraged by lower interest rates to get off the fence and go get a house. Definitely worth watching. What's happening with the mortgage rates? Last week, we had a couple of inflation reports that came in as expected or slightly lower than expected, which is good, and it pushed the 10-year Treasury yield lower earlier in the week. That, of course, was followed by a couple of stronger than expected job and retail sales reports, which allayed some of the market's recession fears and sent the 10-year Treasury yield back up. Of course, the 10-year Treasury is one of the best indicators of where mortgage rates will end up. Despite the ups and downs in the 10-year Treasury, the 30-year fixed remained stable at around 6% for the majority of last week. But yesterday we saw one at 5.875. I just checked it and it's still there. Looking ahead, I'm still interested in the Fed board meeting next September on the 17th and 18th, which is about a month away from now. The market expects the Fed to cut interest rates during this meeting, but it is unclear whether it will be 1/4 of a point, which is 0.25%, or 1/2 of a point, which is 0.5%. We've been in this position before, where the market thought the Fed was getting ready to cut at the next meeting, not as strongly as it thinks right now, but still pretty darn certain. And then we saw that confidence erode with a couple of inflation reports that came in below expectations. Nothing is certain, and things can change at any time. One other thing to note is that the real estate industry has just had a seismic shift in the way our business works. Previously, sellers would offer to compensate buyers' agents a percentage that would be advertised in the MLS. The MLS no longer has any information about buyer-agent compensation as a result of a settlement with the Department of Justice and the National Association of Realtors, and therefore each buyer's agent must have a signed buyer representation agreement in place with the commission clearly spelled out before they can even show a home. Since sellers will no longer be offering the roughly 3% to the buyer's agents, you would expect that for apples-to-apples comparison, the sellers would all lower their prices by 3%, but that's just not happening. Buyers are still still allowed to ask for the seller to pay their agent in their offers. So when you take today's prices and add in the buyer's agent compensation, we may be looking at a larger jump in prices as buyers increase their offer over asking in order to cover their agent's compensation. Buyers usually just don't have extra cash to pay that. This has never happened before, so we don't know what exactly will happen to prices, but I'm keeping a close eye on it. This is a really important change in the industry, and it'll be interesting to see. So, if you have any questions or further thoughts about this, send me an email to lauren@pdxhomesforsale.com or call at 503-683-1885. Subscribe to our newsletter or our YouTube channel, or both, to make sure you get all the updates that you need. I'll see you right here next week.